Well, hello, everybody, and welcome to your Calgary real estate investor update for August. We're going to start things off today by taking a look at the rental market, where we're seeing inventory levels rise for nearly all of the tracked segments. So, this is not uncommon to see it near the end of the summer, as the busiest months for tenant placement typically fall April, May, and June. So July's inventory levels are creeping up just a little bit as tenants don't want to move so much in the summer. They'd like to be placed prior to that so that they can enjoy the summer months here in Calgary. Now, we may see this drawn down a little bit as we head into the fall. That'll be something to remain to be seen. But for now, anyways, inventory levels are rising and landlords need to be mindful of that. Now, with respect to rents, they're holding steady at present. So the recent inventory bump isn't dramatically changing the pricing picture for both tenants and landlords for what they can ask. An interesting thing here that we're seeing, and a trend I think that's worth watching, is the detached home segment and the asking rents for that. So they continue to climb. And I think that this is because there's so many apartment condos and purpose-built rental complexes being built with smaller units that there just isn't enough available inventory for tenants to trade up to as households form and people that have recently moved here look to put down some roots and find some more space. So this is something that I think will be interesting to follow, and I think landlords that have small single-family homes or even townhouses inner city with some square footage, I think that they're going to be positioned well to take advantage of competition for units that fit this particular size for tenants to go and progress into. So we'll see where that takes us. Shifting now over to the sales market. Well, this is the first time in 5 months that pricing has fallen in Calgary, all right? So not uncommon for us to see sales fall down at this time of year, as the same on the rental market. The busiest months for Calgary real estate sales are generally April, May, and June. So sales have come down a little bit in July, but normally pricing will hang around, except this month it fell just a little bit. So we're around $569,000 for a benchmark property here in Calgary. And I think it'll be interesting to see whether there's further drawdown on pricing as we head into the later months. Now, an important thing to note from this is we didn't see a ton more inventory hitting the market. There was actually less inventory in July than there was in June. So I just think that this could be a unique feature of just the sales that occurred in the month of July, and they're just lower overall in pricing. It could have easily been up a grand or two, given that we're not seeing a ton of inventory come off the market, and sales are still pretty robust. So maybe not, maybe a little early to be making a bold prediction about pricing, but I do feel that we've likely seen the busiest months of the year already. Here's a graph that shows the month's worth of supply. So are we in a buyer's market or a seller's market? This particular graph aggregates all of the asset classes together and gives us that number, which more or less puts us right back in the same place that we've been for most of the last year and where we were last fall, other than a couple months in the summer where things heated up a little bit and we moved closer to balanced conditions. But to understand it, you kind of need to dig into the asset classes themselves. What's interesting to note here is the apartment condo segment, which had been getting worse and worse and worse and positioned to be doing worse and worse, is kind of normalized around that 5 months worth of supply segment. So if you got a condo for sale, it's going to take you nearly half a year to find a buyer on average here in Calgary. But the detached and semi-detached are still very much in balanced market conditions, hovering right around that 2.5 months worth of supply. But we are trending up a little bit here across all those categories, given that there's just fewer buyers in the market during the middle summer months. Now, here's a metric that I follow closely to see where things are going from here. So it's the sales to list price ratio. So if the sale price on average is widening compared to the list price, you can expect prices to come down. Buyers are writing aggressive offers. They're fighting for every dime and nickel off the asking price. And sellers, in the busy months may be reluctant to give that up to them because there's so many buyers that are out there looking. But now that sales are starting to fall a little bit, and we've heard this, pricing has fallen a little bit more. Sellers might shift their mindset to more about getting out and getting their equity rather than how much of their equity are they going to pull. And so they may be more apt to accept the lower price offer and see this drawdown for the sale price to list price ratio widen even further. If that continues, then we might see pricing come down heading into the fall. But it shouldn't be too bad. The numbers are really well supported here. The sales figures and the month's worth of supply are fairly consistent to what we've seen over the last year. So nothing here that I think needs to be getting throwing up any alarm bells or anything like that, even though it is the first time in 5 months that we've seen prices come down. Not a lot of news out there at this particular time. Just we saw so much news at the very beginning of summer prior to Stampede with all the politicians around. So right now we've got just a little bit. We're seeing multifamily sales falling. So this is a response by the development and builder community to just a slower market condition. We're in the downward part of the cycle right now. And we're seeing fewer sales because fewer inventories being brought to market in the multifamily segment. And I'll finish off today with a cool story. We are seeing another federally funded and provincially funded affordable housing complex being put up in Curry Barracks. So Canada Lands Corporation giving up some of their land to get some of this stuff built. And I did a reel on this several weeks ago about another affording housing project in Southview. And everyone's very much in support of federal dollars going towards this type of asset class, and I am too. So it's great to see here. And the city's got a very ambitious goal of nearly 3,000 affordable housing units per year is what they want to see built. And this is a project that's going to help that out. So that's our market update here for the month of August. I hope you guys are having an awesome summer out there. I can't wait to get back to in full swing here in September in a few weeks' time. Thanks very much for watching, guys, and we'll see you next month.